What's up everybody, and welcome to another episode of Drive to Thrive. In today's video, I want to take a look at BlackBerry, seeing what the latest charts are telling us, as well what the short interest ratio looks like, and some of the options that I've been buying for the last couple of weeks. So if you guys are brand new to this channel and you like the way I present the information and you're learning something new, please consider smashing that like button, hitting that subscription button, and hitting that notification bell so that you get notified for any future content that I post. This will help me greatly to get my material out there into the YouTube universe and attract more viewers like you. So thank you so much for doing that. Now let's go over to my computer. Alright, so starting off here on our 4-hourly chart, we can see that we ended up breaking this rising trend line that I highlighted in my previous video, and seems like we are filling in this gap right now. So if you guys see my previous video, this is the zone I was highlighting that I was going to be adding into my long calls here, and if you guys haven't seen that video, I'll put a link somewhere up there. But what I'm looking for in the upcoming weeks is if we can hold this support here at around that $12, then let's hopefully we break above this rising trend line again, come back, retest it, and then we gear up for another leg higher. If we can't hold this rising trend line, then what I'm looking for is a rejection over here and then possibly coming down into the levels here between 980 and 940. So this is kind of the two scenarios that I'm preparing for. And now let's take a look at the MACD and some stochastic. So starting off with the daily, our MACD is looking still in that bullish momentum, which is good, rotating down just over to that zero line. Our stochastic is currently sitting in that oversold territory, so another good sign for our bullish trade here. If we go over to weekly, this is where we see that we have still some room for the stochastic to come back lower. So I'm expecting if we do get rejected off of that trend line, like I mentioned, this is why I could see us coming back down into this 950 area down here. So this is what I've been looking for. And now looking at the short interest ratio here, so as of July 1st, we are sitting at that 15.42%. So being steady between that, you know, in the mid-teens here, all the way up to 23 seems like. Now, looking at the current position that I have, so like I said, this week I ended up buying 2 more contracts to give me a total of 3 contracts of this December 17th, $12 strike. So currently sitting down about 25%, but again, because I have so much time on this option, you know, I'm not panicking yet, and I don't have a stop loss set. I usually don't like doing stop losses on long calls because, you know, there's been many times where I set a stop loss, let's say at 50%, and if we got down into it, I got stopped out, and then sure enough, in the long term, the stock ended up doing what I wanted to do. So now I just focus on doing my maximum investment, which in this case is going to be $1,500. So far I've used 1107, and I'm just gonna let the stock do its thing. So if you guys do want to look at these options, you know, they're delta 62, so still pretty decent probability of this trade working out in our favor. And we are looking currently at $2.80. So the break even on that would be 12 plus 280, so 1480 would be our break even on that trade. And I do think that we can get to here, let's see, 1480 would put us somewhere down, let's say somewhere down in this area, and I truly do think that by December we can be above that 1480 price, so still a good option to look at. So that is it, short and sweet guys. If you liked the video, please don't forget to smash that like button and the subscription button, but otherwise I'll see you in another video. Ciao ciao.